Friends, I'm Freude, and today I will be introducing Ghana. Ghana has she has actually had experience as she has worked before, but she has decided to join CA just very recently, and she has entered IPCC through dietary route, and yeah, I would like to welcome Ghana.
So Ghana is speaking on which topic?
So this is regarding Argentina reforms, mostly about the new president, the policies he has
In
taken.
Argentina. Then what are the other
I
things?
think the gold, about gold price and all.
About Argentina and gold. So these are the two topics you are covering. Okay.
Good evening, everyone.
Good evening.
Okay. So my first article is on January 23rd, 2000.
You need not mention the source, but you can just come out globally. You are giving a view. Okay.
So this is regarding the Argentina reforms, begin to lure investors, and this is mainly about the new president, that is Mauricio Macri, and so he is a new president of Argentina, and he has promised change will come to South America's second biggest economy, and investors from Coca-Cola company to Royal Dutch Shell Milk are taking his word for it. So it's like President Mauricio Macri's visit to the World Economic Forum in Davos. He secured $1 billion, and also Macri has vowed to unveil the policies of President Cristina Fernandez that drove away interest in the country. And in his first month in office, Macri has already devalued the peso, lifted most capital controls, revamped the statistic agency, and kicked off talks with disgruntled creditors from the nation 2001 default. And the initiative that he took, like the Mukhtar Ken, the chief executive officer of Coca-Cola, met with Macri in Davos, where they discussed investment for developing operational and distribution infrastructure, as well as the environmental initiatives and promotion of exercise. Then I have second article regarding the same. So it's like Macri has launched the bold plan to revitalize the economy plagued by high inflation. So it's like crisis condition. One should not underestimate the importance of this move, not just for Argentina, but also for other countries. And Argentina's economy has been badly underperforming for decades. Previous government sought to avoid difficult policy choices and fundamental issues by implementing inefficient controls that grossly misallocated resources and undermine Argentina's ability to generate the foreign exchange earnings needed to cover its import bill, resulting in domestic shortages.
Okay. So Argentina, one, it has more inflation. Secondly, in the past, the policy implementation were not doing proper. Thirdly, the government has come out in the World Economic Forum saying that more than $1 billion will be invested, like good companies have started taking interest. Yeah, further?
And also they had a drop in commodity prices has in the same situation, and also depleting what little growth dynamism the economy had left, and fueling inflation, deepening poverty, and spreading economic insecurity and financial instability. And also they have the government in such situation have 5 basic options to contain crisis condition. The first one among those is run down the financial reserves and wealth that were accumulated when the economy was doing better, then borrow from foreign and domestic lenders, then cut public sector spending directly, then generate revenues through higher taxes and fees, then use the price mechanism to accelerate adjustment through the economy. And also government often face complications that undermine effective implementation of these measures. Policymakers are not careful two problems. If the policies makers were not careful, the two problems may may arise. The first problem was the specific factor, real or perceived, blocks some options from the adjustment menu. Some measures may already have been exhausted. The country may not have any wealth or reserve left to tap.
Okay, does Argentina produce oil? Is there any indication to show that Argentina has oil in the article? Nothing coming out, no? Okay,
No.
continue. Okay.
And also shortage of willing lenders. And the second problem was the problem of timing. Effective implementation requires understanding key features of economic and financial interactions, including not just feedback effects but also the behavioral aspect of private sector responses. And also already most export taxes and currency controls have been scrapped, income taxes have been cut, and the exchange rate has been freed up.
So the advantage of doing this is to make the economy more free and more investor friendly, so that the people can invest in the country.
And towards it, the bold steps that the government took was a few governments have pursued this type of sequencing, then much less with such favor. Indeed, most governments have hesitated, especially when it comes to full currency liberalization.
Okay, I think we understood now. Come to the gold sector.
Okay, all right.
So basically, this article talks about freeing up of the Argentinians.
Yeah, so she's focusing on Argentina because Argentina is also one of the largest South Asian economy. I think it has oil. Argentina has been famous for oil, and in the South America as a continent, it is the largest one other than Brazil. So we have just taken this as an example in terms of the studying, and it has been in the news recently. Yeah. So now she is touching on a very important aspect, which is gold. So once she completes this, we are going to speak to one of the owner of a gold company right now, and he will be doing us a live session with him on the phone.
So it's regarding gold. So it's going to be another challenging. It's the report regarding Dubai. Okay, it's going to be another challenging year.
Instead of reading, just give your own assessment. So main points.
So it's telling that it will be a challenging year. This comparing to 2015, it will be in 2016. It will be more challenging. That for bonds, gold are comparatively safer investment options in 2016 compared to 2015. And the Dubai-based bank, a wealth management unit, on Wednesday has they have issued an outlook regarding this 2016 gold market. The outlook said 2016 looks like it will be a very tough year for investors. And also a chief investment officer believed that there would be opportunities down the road. And for the gold price and for the bond markets, investors were advised to keep at least 10% of portfolio in gold.
Okay, so to that extent, the understanding is that the gold price has come down. Only for the last 2 weeks, the gold price has increased. So we just stop here because of the time part. So thank you, Ghana. Okay, now because you touched on the commodity, the worldwide, you will see there are three things which commands a lot of attention. One is oil, which you covered in detail. One is gold, then we will come to the dollar side. The gold is inversely proportional to the movement in dollars. So when the dollar increases, when you get higher returns in dollars, it is considered to be safe and people invest in dollars. So when they invest in dollars, then gold goes down. Now currently dollar is weak, dollar is down, so gold has substantially gone up. Gold and oil generally go in proportion. So if the oil is down, the gold is down. If the oil is high, the gold is high.
Isn't the dollar strong currently?
Pardon?
Isn't the dollar strong currently?
Dollar?
Yeah.
Dollar globally, I think it is weak now because there are some. If you go into the history of dollars, actually when a country prints currency, it is to be backed by gold. But US long back when President Nixon was there, they removed the pegging of the currency being printed with gold. So now US is printing currency. But now so much of currency has got printed that if you go and really do the valuation of the currency by itself, US is heavily indebted, which means it has huge borrowings and a huge amount to be repaid. But what has happened a few years back, I'm coming to gold and dollars, when this currency depegging was done, which means that you are investing in dollar which was backed by gold, that time the US government decided with most of the world countries which are oil producing that whatever transactions you do in the world in terms of buying and selling, you will do against dollars. So this started around 20 or 30 years back. As a result of that, whatever the transactions you are doing today globally, in terms of whether it is trade or oil trade or non-trade, the currency is dollar. So when you are purchasing anything against dollar, then the demand for dollar goes up. So because of that concept where the dollar is being treated as a global currency, it is maintaining its value. Otherwise, intrinsic, if you look into the intrinsic value of dollars, it may not be real because it is not backed by gold. Neither they have so much of reserves in the country to back by the dollar currency. So today, even when you speak to the people, okay, for example, in India, what is the currency? Indian currency is weak, but dollar is stronger. So Indian currency is still likely to be more weaker because there is the world generally say that they do not have an option other than the dollar to be treated and accepted as a global currency. So because of that acceptability, the dollar is strong, gold and dollar fluctuates, and oil is because of the demand and supply, a lot of factors which you see. So when you study, maybe you are studying from your textbooks and a lot of knowledge will come from the academic side, but these are the global things which will always attract the news worldwide. Dollar, gold and everything. With that, we just take a small break in terms of before we have the next speaker coming in.